Aloha and welcome to Java and welcome to December. This is for Friday, December 1st, 2023. First, I would like to thank everyone for their support and for being here with me. I really appreciate that. If you don't mind, hit that like. Keeps this going, and so far we're doing okay. I am branching out. I am on Substack, also X's Twitter, and probably trying to add to Rumble, just in case anything happens here. So moving forward, we've got our MMRI 279, relatively stable since yesterday. Did have a move in the 10-year yield. I'm going to show you that in a moment. That was on the Fed president started speaking again, and they were talking about rate hikes. So as a result, we've got a slight pullback in the relative strength of the dollar and the 10-year yield. We're showing mixed boards right now with slight increase in volatility, but this is still a low number. We've got gold and oil still up at the moment. Oil is a different story as well, and we've got futures mixed. So I put this here so you could see the action on this 10-year yield, what happened. As soon as they started talking, caused that plummet. So this is just the kind of market action that can happen. We were not long ago right at 5%, so that can change very quickly. So market sentiment, if I had to give it in one word, is chop. Waiting to hear from Jay Powell this afternoon. We are also getting manufacturing. So right now, the market trend is in a bullish channel, but we're close to resistance at the highs. So kind of looking for a pullback is the higher probability. And as I said, that chop as it moves around, and it is Friday. So we'll be looking at that as well. Again, Fed presidents getting PMI, ISM manufacturing, and also construction spending. Fed Chair Powell will be speaking at 11 and talking in Atlanta at 2 p.m. So I've got a stock chart here I wanted to bring out, not financial advice. However, it is Louis Vuitton, the luxury brand designer. Morgan Stanley gave them a downgrade. And I'm bringing this up for two reasons, not just the stock, but more importantly, this is a good, if you would, a thermometer for where we are with what is actually going on in the real economy that they won't talk about. They're saying that we're just wonderful and everything is going on strong. We had great Black Friday sales, whatever, online sales, incredible. But the real story is number one, much of those sales were things that people had intended to purchase in the first place, and they were just waiting for the sale. And number two, we have just leveled up with this. So what happens is the lowest rung of financials goes first. So people that are living paycheck to paycheck, they're going onto the system. They can no longer afford it, and they cannot pay off their credit cards, so getting their cars repossessed, and don't have much. Second level are those that have a little bit of savings, but they didn't have much. They've been wiped out. Third level, we're moving into the middle class. They do have savings. These are the ones that are, kind of going through their savings using credit cards and also using a firm, thinking they can just pay this back in a little bit because they're believing the hype about this being a short-term thing and that we're actually in decent shape. They just need to hold through, ask for a raise, or go on strike, and everything will be fine. This is the next level up, the higher middle class that does have savings. We're not in the upper class, but these are the ones that are basically kind of keeping up with the Joneses. They do have savings, they do have other assets. However, they're now looking at what is going on, seeing that it's more long term, and have a little more financial savvy that it may not be as they're saying. So, since demand is going soft in this sector, it's indicating that. So, we've got oil and commodities moving up on that agreement to restrict supply with OPEC. So, copper, I want to bring this up. Copper has a nickname, Dr. Copper, because it indicates manufacturing normally. So if you've got a lot of copper that is going in strong demand, means of manufacturing things, and it's good for the economy, it's a positive outlook. We're having issues with this and shutting down the mine, threatening the surplus, but a big part of that is because there is no demand. So, economy in a tailspin, the two put these together, and it's going to be rough. So, I do like copper longer term. I think it will recover with other commodities. However, right now it's going to be very volatile. So, on to the banks. We've got UBS seeing more senior private banker departures. So, these are upper management, the ones that have taken their bonuses. And basically, even though this is Hong Kong, this is going on across the board. They are taking their bonuses that they got toward the end of the year and they're bailing like rats off a sinking ship. So we've got a little more about banks, the debanking saga. If you haven't heard about this, it's basically something that's starting to where they're sending customers letters saying that they've closed their accounts and not giving a reason. So with all the silent bank runs going on, now the banks are just closing accounts because they cannot maintain these. And I find it ironic. The two-day picture is Greg's Choice Bank of America and My Choice Wells Fargo chosen to fall. So actually, Bank of America has more exposure to derivative debt bomb that's ticking. The only reason I did not choose them is because I believe they're going to get bailed out and someone's going to take fall. I think it's probably going to be Wells Fargo, but we'll see. So we've got a couple of other stories that go right along with what we're talking about. More Americans expected to buy now, pay later for the holidays, which the numbers are coming in. That's exactly what they did. And analysts see a growing risk. Well, I don't know it took them so long. We saw this risk quite some time ago. Anyway, it's turning into buy now, pay never. Americans are finally turning frugal after splurging over the summer. And this is just talking about demand pulling back in general. The US economy has slowed in recent weeks with inflation and labor cooling. So, labor cooling, people are losing their jobs, jobless claims going up, and unemployment rising. We are in a recession. Technically, the numbers support it, they're just not admitting it. So, how much farther we go into a depression, we're right on that border. So, they're not letting you know, and they will never call it a depression until after the fact. So, we are on that borderline now. I think we're going to have to do some rate cuts. We'll see. They're expecting that. I don't think it's going to be anytime soon because they know inflation will come back. And they want inflation, just not too soon. So we've got some shock therapy going on for Argentina. This also plays into the oil play. So Argentina's new president-elect is hiring now. He's an ex-JP Morgan trader. So I thought this was interesting. Basically, the US thinks they have Argentina in their back pocket, and now all of their oil reserves and whatever else they have at their disposal. So we'll see how that goes. With real estate, there's a couple of things here I wanted to bring up. Evergrande with the Chinese debacle. Basically, the creditors now know they're losing their shorts. So they want controlling stakes in the assets that the bank holds. This is a massive amount of properties. So we can watch this because it will definitely be felt in the United States real estate market. Speaking of, I wanted to bring this up. If you have not heard of Arrived, so Arrived is a company that sells fractional shares. They're targeting single family homes and it is owned by Amazon. So you could put in, for instance, $100 towards this house, and the quote unquote profit that comes out of it is split between everyone that has put their money into it. So, like a real estate investment trust, we'll see how that plays out. Some lava updates. Got two things here. One is I wanted to bring up that X, which was Twitter, was ordered to turn over information on users who interacted with Trump. And this is, they worded this poorly, in my opinion. Not that interacted with Trump, but if you did anything with a post on Trump's account or anything to do with it. So if you even just liked a post, your information now is in. The FBI really squeezed them for that information. And the reason I'm bringing this up is because the surveillance is becoming ridiculous. The overreach is out of hand. And yeah, anyway, government overreach. I wanted to bring something up about auto insurance. Shout out to Shannon. Thank you kindly for all you do for me and for bringing this one out. So I want to look into this a little more because I want more details to bring you. But basically, what this is saying, if you have a car that has an autopilot feature, what it's saying is that your car will drive safer if you have a premium uh, auto insurance policy. So, in other words, if you buy the cheaper policy on your car, you might get autopilot that was trained by Timmy, who's just out of high school and just got his license. And that's going to be your autopilot trained, as opposed to, getting Jeeves or somebody who's, worked for MICIA and did driver training school, and he's going to be your autopilot trainer. So, just something interesting there to look out for that. And also, if you have a vehicle that is after, I believe it's the year 1998, you do have an auto shut off feature in your vehicle. And I've seen this in action myself, to where any local authorities, including in this case was local sheriff's department, can shut off your vehicle remotely. So got to be careful of this control. It's getting out of control in my opinion. So as I said, I'm on Substack now. I'm trying to build that up. I'm on X, which is Twitter, and then Rumble coming soon. And I'll post on both, but that way if YT decides to take my video down, it will be on one of the others. So with that, I wish you all a green trading day, just a wonderful day in general. Thank you guys again so much again. Until I see you again, stay free.